You're watching a weekly CFD overview of global financial markets. The dollar slumped more than one-year low against a basket of currencies as worries on the short-term outlook increased. Doubts over the Fed Reserve's plans for a third rate hike this year have also contributed to dollar weakness. Markets gave less than 50% probability of a rate increase before the end of the year, according to CME's FedWatch tool. It has fallen nearly 4% over the last month and more than 8% this year. Euphoria continues. Last week, the euro rose 1.7% to 1.1675 against the dollar. It has gained more than 10.5% so far this year and is the best performing G10 currency. The single currency got a further boost as German business morale hit new high, according to the Munich-based IFO Economic Institute that compiles the data from 7,000 German companies. In addition, Greece is returning to the primary bond market for the first time since 2014. The Fed starts a two-day meeting later today with no change to interest rates expected. Beyond the outcome of the Fed meeting on Wednesday, investors will be closely watching U.S. advance of second quarter GDP estimates on Friday to see if the economy is recovering. The British pound and the Japanese yen strengthened against the declining dollar, while the Aussie touched a two-year high. U.S. earnings season is gathering momentum, with dozens of companies due to report, including Dow Jones components like Coca-Cola, Amazon, Boeing, Daimler, Intel, Chevron, ExxonMobil, etc. Last week, gold prices rose as political uncertainties in the U.S. put pressure on the greenback, which spurred haven demand for the precious metal. The yellow metal price reached its highest level in a month on Monday, as market players looked ahead to a Federal Reserve policy meeting. Oil prices continued their march higher this week as fresh pledges from Saudi Arabia and Nigeria to respectively pull back on exports and output boosted sentiment. At an OPEC meeting on Monday, Saudi Arabia announced it would cut August exports to 6.6 million barrels a day, which would be a million less than a year earlier. In addition, Nigeria, which has been exempt from this year's OPEC-led production cut deal, pledged to cap output once it reaches a level of 1.8 million barrels a day. Meanwhile, in the US, weekly figures from Baker Hughes showed that the number of active rigs drilling for oil declined by 1 to 764 last week, suggesting early signs of moderating domestic production growth. Bitcoin price rose as the cryptocurrency avoided a split into two independent currencies last week when its network supported a proposal on upgrading to its software in order to speed up transactions on the Bitcoin network. You are watching a weekly CFD overview of global financial markets.